Hello and welcome to this week's LOLC Securities Weekly Market Roundup. I am Tharindu Amarasekara.
And I am Negara Vijayamana, and this is the sound of profitability.
Sri Lanka's current account recorded a total of $415 million of surpluses for the second quarter of 2024. So far this year, the current account has about $1.1 billion in surplus, a sign that the economy is also recovering.
Sri Lanka started to record current account surpluses from around the third quarter of 2022 when the central bank stopped printing money and its deflationary policy started to show up in the balance of payments. The financial account officially started to show a deficit from the fourth quarter of 2022 as loans were repaid on a net basis and private banks also repaid syndicated loans and later built dollar reserve to cover net open position shortfalls.
According to Cabinet spokesperson Minister Vijitha Hera, Sri Lanka is actively seeking membership in the economic bloc BRICS. A formal request for support was made to India. BRICS, an association of emerging economies comprising Brazil, Russia, India, China, and South Africa, was established to challenge the economic dominance of wealthier nations in North America and Western Europe. Combined, the BRICS bloc had a GDP over $25.85 trillion in 2022, which is slightly more than the United States. The bloc has recently expanded to include new members such as Egypt, Iran, Ethiopia, and the UAE. The invitation to Sri Lanka to attend the summit follows the former President Wickremesinghe administration's recommendation to apply for BRICS membership, while the membership application still remains pending.
Sri Lanka has signed a budget support loan agreement with the World Bank connected with economic reforms in debt management, banking, and women empowerment, according to the US-based lender.
This is the second part of the Resilience, Stability and Economic Turnaround Development Policy Operation, also known as RESET DPO. The first part, totaling $500 million, was disbursed in June and December 2023. The second RESET DPO aims to support reforms that improve economic governance, enhance growth and competitiveness, and protect the poor and vulnerable, helping to build Sri Lanka's resilience and fostering an equitable economy. It also includes amendments to the Telecommunications Act and the new Electricity Act to improve services in these markets, as well as measures to enhance export competitiveness by phasing out para-tariffs and lowering customs duties, enhancing women's empowerment and reducing gender discrimination to promote higher and more sustainable growth in Sri Lanka is another key feature of this operation.
Now it's time for the corporate highlights of the week.
The Ceylon Chamber of Commerce commended the government of Sri Lanka for the successful completion of consultations with the Official Creditors Committee and the IMF with regard to the in-principle agreement reached with local and international holders of international sovereign bonds. The Chamber said it looks forward to the completion of the restructuring of Sri Lanka's external debt. The completion of the OCC and IMF consultation process is a positive indicator for ensuring successful future reviews and disbursements under IMF's Extended Fund Facility.
Millennium IT ESP, a leading solution provider for enterprise solutions around the world, has established a significant milestone in its growth journey by establishing its Global Service Delivery Center at the Colombo Port City. This center has been established and registered under the Millennium IT ESP Singapore, one of its subsidiaries, and will be the primary hub for servicing their growing global clientele.
According to CEO Shevan Gunatilaka, this enables them to drive further growth and innovation, ensuring that they continue to meet the dynamic needs of their customers around the world. The company expanded into Bangladesh in 2023 to cater to the SAARC region and subsequently to Dubai.
Sunshine Healthcare Lanka. The healthcare arm of the diversified conglomerate Sunshine Holdings PLC has entered into an agreement for an equity investment up to 3.27 billion rupees with the IFC. Subject to satisfaction of conditions, IFC will own approximately 14.7% of stake of Sunshine Healthcare Lanka. This strategic partnership will enable Sunshine Healthcare Lanka to accelerate the execution of key capital projects that aim to reshape healthcare delivery in the country. This includes significant expansions in manufacturing and medical devices. Sunshine Healthcare Lanka is set to significantly expand its pharmaceutical manufacturing capability by doubling its capacity in respiratory products. In parallel, the company will enhance diagnostic capabilities by investing in state-of-the-art medical devices, providing better access to cutting-edge healthcare technology with enhanced efficiency and productivity.
The current real estate sector of Sri Lanka is doing remarkably well. We're seeing significant growth in the sector, especially with the decline of the interest rates, and which are also further expected to come down. We're also seeing an overall shift in the macroeconomic conditions, together with the political stability kicking in, and also with inflation now decreasing, which is all positive signs of consumer confidence. And also the volume of new developments being put out by major developers in the sector, which was very encouraging to see. With all of these conditions currently going as they are, we are hoping to see a more robust real estate sector in the upcoming year.
And this is the ESG news of the week.
The catastrophe bond holders are bracing themselves for a big impact after the combined effect of hurricanes Helen and Milton are expected to trigger payment clauses that has not been seen in years.
A catastrophe bond is a high-yield debt instrument that is designed to raise money for companies in the insurance industry in the event of a natural disaster. A catastrophe bond allows the issuer to receive funding from the bond only if specific conditions such as earthquake or tornado occur. If an event protected by the bond activates a payout to the insurance company, the obligation to pay interest and repay the principal is either deferred or completely forgiven. Insurance industry loss is in the range of $20 billion to $50 billion from Hurricane Milton, with a 0 to 4% principal loss possible for the catastrophe bond market. Estimates that had indicated the bonds would lose as much as 15% have now been replaced by calculations showing investors are more likely to see a hit in the single digits. That is after Milton made landfall as a Category 3 hurricane, weaker than originally forecasted.
This is the international highlight of the week.
China has implemented tit-for-tat anti-dumping measures on the European Union brandy imports after the 27-member bloc voted for high taxes on the Chinese electric vehicles. Brands from Hennessy to Remy Martin in Europe has been affected by these measures of China.
China's Commerce Ministry said preliminary findings of an investigation had determined that dumping of brandy from EU threatened substantial damage to its own brandy sector. In a sign of rising trade tensions, China's ministry added in another statement that an ongoing anti-dumping and anti-subsidy investigation into EU pork products would make objective and fair decisions when it concludes. France was seen as the target of Beijing's brandy probe due to its support of tariffs on China-made electric vehicles. French brandy shipments to China reached $1.7 billion last year and accounted for 99% of the country's import of the spirit.
And that's it for LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intent. We will see you in a brand new week.